Homeownership is not just about finances. It definitely helps. But we
Correct.
know that if you own a home, neighborhoods where there's home ownership, the crime rate is lower, your divorce rate is lower, your kids' test scores are higher, your job satisfaction is better, your mental health is better, like all these great benefits. Because these are the studies that are done to go to Congress and ask for down payment assistance money.
So today we have Andrew Postell. He is an originating branch manager at CrossCountry Mortgage with experience in mortgage and in real estate investment and in real estate investment industries. He's recognized as a top producer by Scotsman Guide and Mortgage Executive Magazine. He specializes not only in VA, FHA, and DSCR loans. We've been talking on that a little bit. He also provides strategic advice on homeownership, down payment assistance, and also wealth building strategies. Andrew, thank you so much, and make yourself at home.
Thank you, Dee. Thanks for having me. It's an honor for me to be here.
So you were talking about you got started in 2010. What led you to join into the real estate and mortgage industries?
Oh, okay. So Dee, I was already investing in real estate. I had rental properties. I started that in 2000. So 9/11 was my first crisis that I was in real estate. Now, I did
Okay.
not even think about I could be a part of the real estate industry. At the time, I was actually a college student, and then I went to work for at a nonprofit charity. Then I was in commercial insurance. So it wasn't even part of my mantra to be in real estate as a professional. I just invested in real estate rental properties off to the side. So I got a recruiting call one day, and they wanted to hire me as somebody that comes in and fast track in the executive management of a company, and that attracted me. And it just happened to be a mortgage company, and I'm
Oh,
still in the
wow.
mortgage industry today. So me being a loan officer has significantly helped me be a better real estate investor.
All right. So, how did managing your own rentals change the way that you structure loans for your clients today?
Yeah, now I can give firm advice. Hey, we're looking to do this. Trying to accomplish this piece. We want to go in this direction. I can tell them firsthand experience. Here's what you need to look for. Here's what will guide you to be a successful real estate owner. Even if you're an out-of-state investor, I was an out-of-state real estate owner for 15 years. So if you're looking to buy a rental property or get into the real estate investing world, I may not know everything, Dee, but I know a couple things.
Well, and your current experience gives you a lot of weight on how to guide people into their own experience.
Yeah, I feel like you're a real estate agent. So I'm not coming to you for you to be a real estate agent. I need expert opinions and advice. Sometimes I might need a little bit of hand holding. I might need something else than just going to go buy a house. I can almost just go buy a house on my own. Same thing with the mortgage person. Everybody sells a loan, but very few places can give you firm expert advice about how to be successful in it. And I feel like that's been one of the biggest places that's helped me succeed in this industry is being a rental property owner. That's helped me become a better loan officer for sure.
So, with that, what do you think is the biggest hurdle you faced so far, and how did it shape the way that you guide your clients?
Yeah, I feel like there's two paths for me, right? I've got a side hustle I own rental properties, and then I have my professional career, which is a loan officer. So as a real estate owner, the thing that always gets in the way is things outside of my control. The economy, war, all these things that are outside of what I can control. So one of the things I learned early on is that I have to live. I know this is going to sound very unexciting, but I have to live a little bit beneath my means to save a little bit of money so that when these things that happen outside of my control, it doesn't derail me from being financially independent. I'm trying to create generational wealth.
Yeah.
If I can just create a plan, and it's usually around saving appropriately, not a lot, but just some, I can then be financially successful later in life. As a loan officer, that certainly has helped me because now I can guide people in that same path. And those are always the challenges. The things that are outside of our control hinder us the most.
And most people are always looking for the passive income. How do you create passive income? What is the way to create passive income? And most everything that people talk about with side hustles are things that you have to do. If you Uber or Uber Eats or DoorDash or any, that's you physically giving up your time for money. The only way to really make passive income is for it to do it while you're not physically involved. And real estate is one of those pieces that actually does give you a true side hustle. Now, Andrew, you specialize in low down payments. And one of the things that I have been trying to reach all of our customers, our base for this podcast, is to reach clientele who have heard the myth that you have to have 20% to put down to be able to buy a house. 20% when we were buying homes, or when I was buying a home, could be $20,000. Today it's $80,000 just on average price points. So it's a huge difference. And when people are hearing that hurdle, they're like, I'm never going to be able to buy a house because I have to have $80,000 in the bank. Whoever has $80,000 in the bank. You specialize in grants and assistance. So what do you think is the number one misconception that maybe even Charlotte buyers have been hearing about free money to buy a house?
Ooh, I don't know. How long of a podcast is this, Dee? I can preach for a long time here, but okay. So I also deal with a lot of people who are very concerned about the world and society and where they are. And to be frank about it, if you are of a certain socioeconomic place, you have a lot of pressure on you right now. Yeah. Homeownership is harder than it ever has been.
Yeah.
If I could go back in time 5 years and buy a house, I would do it. It was so much easier, right? So imagine what it's going to be like in 5 years from now. Yeah. It's not going to get easier. It's only going to be harder. It's frustrating that it's like this. I don't know how to change our society. I don't know how to do that. So if the rules are that I create wealth through home ownership, if that's one of the easier ways to do it, I guess I just have to do that. And one of the things that I want to emphasize here is I started out with a first-time home buyer program. When I bought my first home, it allowed me to come out of pocket like $1,200 to buy a house. I still help people do that today. In most down payment programs, there's a little bit of a trade. They'll give me some money, but my rate might be a little higher.
Yeah.
I can always refinance, but it gets me in the door. If you own a home today, in 5 years, you're going to be very thankful that you own it. It's not going to get any easier next year or the year after that. And I just want to encourage everybody to think about consulting with your agent, consulting with your loan officer about, can I even make this possible? And if they're good, they'll give you a little plan about how you can get it accomplished. This is what I want to encourage everybody to do. I can't just put money into the stock market and earn 7% and be wealthy. I didn't have any money to begin with. How do I have no money and get money? Real estate is the most consistent piece of an investment portfolio that helps you create wealth for your family. I hope that makes sense how I'm saying it.
Exactly. Well, no, and I tell people every single day, when you start this process, there's going to be a point that the loan officer, really it's mostly the underwriter, is going to ask for something, and you're going to feel like it's the third time or the fifth time that they've asked for the same thing. And you have come to a point where you're like, I swear if they ask for one more piece of paper, they can keep the ever-loving house. And I tell people, I said, pick up the phone and call me. I'll let you vent, because it's not just you. I have been there. My mom has been there. My children have been there. If you ask me for that one more piece of paper, I swear. And if it's been that way since from the beginning, or at least from the time frame that I bought my house, so that was 2000 to 2026. So I've been in this as either a purchaser or a real estate agent for more than 20 years. If it's been like that from the get-go, it's not going to get any easier. And from what I understand with all of my clients is they're asking for more and more every single year. So it's not going to become easier. Your best bet is to make the decision, if you can, today, because that's always the best time to buy, because your home will always appreciate. It's only been in rare circumstances, the black market, where everything fell apart in 1929 and 2008. Those have been the only two times that real estate actually depreciated and didn't appreciate. So it's always better to take that step. What do you find to be the most expensive mistakes that first-time buyers can make?
Oh, honestly, the most expensive mistake is waiting.
Yeah.
All right. Because the homes get more expensive over time. Now, that's the benefit when you own. The value of my home has gone up. So I can leverage my value. I can tap into it, and I can use that home to buy a nicer home later. There's all sorts of different ways that you can use your home. But every year you wait, let's say you rent, and your rent's, I don't know, $1,500 a month. That means you're paying Andrew. I don't need your money anymore. Remember, I'm a landlord. I own rental properties. Every year you're going to be paying me $12,000 to $15,000 that you're not going to get back. And in that time, the home that you were looking at has gone up in value. So now that's worth even more, and it's even harder to buy. So you paid me 15 grand. That home you were looking at is now worth 10 to 15,000. You lost 30 grand by waiting. Again, it's really upsetting that it's like this. But this is why you're listening to this podcast, right?
Yeah.
I hope so.
And that's one of the reasons that we talk about this is like and I know that a lot of people goes, every real estate agent's going to tell you that you need to buy a house. No, I don't tell everybody that they need to buy a house, but I will tell the people who are like, interest rates are too high. I need to wait until the interest rates come down. The home prices will always outpace the interest rate. And so your home value will always be more expensive than your interest rate is. So when you're waiting for the interest rate to go down 0.5%, your home is now increased in value over what you waiting did. One of the other ones is I had one of my clients who, she was a first-time home buyer, and she was able to buy a much larger home than she ever expected. And she's getting ready to have another baby. And so she was like, oh, we wanted to buy, again, for a first-time home buyer, and she bought a $400,000 house. That was much more than she was expecting. And this was pre-COVID. And now she's looking at, okay, now I want to double the cost of that house. She was in her 20s. She's still in her 20s. And she's, okay, I want to buy a $900,000 house. She goes, when do you think interest rates are going to hit 3% again? And I was like, well, baby, the last time that it was 3% was World War II. And then it was 2008. So World War II was 1944 and 2008. So 60 years. So my guess would be 2090. 2080, 2090, something along those lines. That's my next guess. And one of my other mortgage folks told me, you can have any interest rate you want. You want 3%, but you have to pay for it. And is it going to be worth it to pay for it? Just getting an interest rate, just 1% interest down can cost you like $20,000. Is it worth it to do that, right?
And Deanne, I want the audience to understand we're talking a lot about finances right now because Dee
Yes.
and I see it. Okay. We see what our clients get years later. Wow, I'm so glad that I helped you and you decided to do this because you're in such a better place. Homeownership is not just about finances, it definitely helps. But we
Correct.
know that if you own a home, neighborhoods where there's home ownership, the crime rate is lower, your divorce rate is lower, your kids' test scores are higher, your job satisfaction is better, your mental health is better, like all these great benefits. Because these are the studies that are done to go to Congress and ask for down payment assistance money. There's even ones where teen pregnancy is lower when families own a home because sometimes there's a congressperson that just wants teen pregnancy to be lower. If you do, Mr. and Ms. Congressperson, here's the study. Give us some grant money so we can help people own a home because
Yeah.
of all these other non-financial benefits. And if you think about it, if you live in a home for a long time, you're going to know where the best doctors are because you've lived there. You go to this one, you're the best dentists, maybe the right grocery
True.
stores, all these things. You get to know your neighbors. Yes, it creates stability. Yes, it's obvious, but not everybody buys a home. So even though it does give you financial wealth, it gives you other things. There's no, what amount of money is it worth for my kids to have good test scores? There's no money attached to that. But owning a home, creating a stable environment for your family, it gives you other things as well.
Exactly. I think one of the other studies they were talking about, because Congress has talked about the hedge funds buying into all the neighborhoods, which was 2012, 2013, 2014. We started seeing the hedge funds starting to buy up all of this real estate. And now hedge funds are making entire neighborhoods. They're building their own homes because most neighborhoods didn't want all these hedge funds coming in and buying. But as a worker, as a person who goes to work every single day, 5 days a week, 8 to 5 every single day, when you own your own home, you have a lot more flexibility in your job, in your life, because you own your home. It gives you a lot more backing behind you if you needed to pull money out of your house or so on and so forth, financial reasons. But they talk about if you control your worker, then you have the ability to have a ready-made workforce right there. If you think about the mills where we live in North and South Carolina, there are a lot of towns, McAdenville is one, that the entire town was a mill town. The owner of the mill built all of these little shotgun homes for his workers to live in, because then he didn't have to worry about commutes. People could walk to work. He didn't worry about family issues because families were right there. So home ownership is at the center of many of these lifestyle, not even choices, but lives, people's lives. Their home is all tied into every single piece of that. So now that we're trying to figure out how a buyer can buy a home, how can a buyer strategically use, let's just say, an FHA home or even governmentally backed loans to build a high ROI or return on investment real estate rental portfolio so they can have passive income?
So, every time I talk to a financial planner, they're like, hey, if we can get 7% rate of return on your money that we put in the stock market, that means every 10 years, your money doubles. Okay. So, like when I got out of the Marines, I had about $4,000. And that was 25 or 26 years ago. So let's say it doubled after 10 years. That's $8,000, doubled again, 16. I don't know. Let's call it 20 grand. I don't know, 56, whatever. It's hardly anything.
Yeah.
Hardly anything. But in my real estate portfolio, I'm using a very small amount of money, like small, especially when I'm buying my own primary home, to buy a large asset. So now my $100,000, $200,000, $400,000 home is going up 5% a year or 7% a year, rather than my $4,000 stock portfolio.
Yeah.
I still will validate investing in this. Like, I can buy a stock for $5. I don't have to have good credit to buy a stock. I don't even need a job.
Yeah.
I can certainly recommend that investment platform for somebody who might be in a different place. Just save money. Just at the heart of it, save money. But the way I use a small amount of money to gain a large amount of wealth is through real estate. My first home was my primary home. It was a cinder block house, and I rented out the rooms.
Yeah.
And then when I moved out, I kept it as a rental. A lot of people will buy their primary homes and then keep them. That's what my uncle did. That's where I learned it from. When he retired, he had 7 properties, and he was fine for the rest of his life. My father, though, every time we moved, he sold his home, which is normal. But my uncle's life was a little different than ours. Mm-hmm. I just made a point to try to keep every single home that I could. So buying your own home with a small amount of money and then keeping it would be an excellent strategy to use. Because now I'm getting the best interest rate I can, primary home interest rate. I'm getting the lowest down payment that I can, primary home loan, 3 or 5%. Those what those government-backed loans do. Give me a very small amount out of pocket. And I can also negotiate with the sellers a little bit better too when I'm buying my own primary home. I can ask for 3% of concessions or 4% or 5%, maybe 6%, depending on the loan I'm using.
Yeah.
But if it's an investment property, I can't even ask for that much. So I always tell people, think about owning your primary home first, and let's see if we can come up with a plan to keep it when you own your second home. The number of people who own 2 homes, in America is just 4%. Only 4% of Americans own 2. That's how hard it is. But if you can do it, it'll change your life.
So with that being said, if only 4% of people own more than one home, this isn't something most people can't afford to carry both mortgages. And then 2, it's really scary to think about having to, what I call, float 2 mortgages in a month. What happens if your renter moves out and you have a month that you have to make your primary and another one? So those are really some big things that people get scared off by. Mm-hmm. But there's a new loan product that, of course, there's been buzzwords all over TikTok about, and that people talk about, these DSCR loans. So how would a DSCR loan be different? Because we're talking about, one, a governmentally backed loan, that it's your primary residence and then you hold on to your primary residence. But now we're talking about, hey, let's take a look at this loan. Can you, one, what does DSCR stand for? And how can we use that kind of loan to purchase a rental property if we already have our own mortgage?
Yep. Okay. I might give you a homework assignment if you're listening to this. So hang tight with me for a second. So sure. DSCR loan, I just want you to think this is an acronym. It's basically a commercial loan. It's not quite, but it basically is. Okay. So stands for debt service coverage ratio, meaning the debt on my property has to be covered by the rental income. Basically, they say you have to cash flow $1. So if your mortgage payment is $19.95, then your rent needs to be $2,000, and that's your income. So if you're self-employed or a business owner, or you don't show any income on your tax returns, or if you're a real estate investor and you don't want the home to be in your personal name, you want to be in your company name, all of these things are accomplished with the DSCR loan. The issue with buying a property off the MLS, I'm going to just take it this way. I still need a down payment. I might need 20 or 25% down, even if I use a DSCR loan. It doesn't count against me. There's no such thing as debt to income ratio when I use a DSCR, but I still need a down payment. So your homework assignment, okay, if you're listening, there's these advanced techniques that we use in the real estate investing world. One of them is called the BRRRR method, BRRRR. It's another acronym, like I'm cold, BRRRR. The BRRRR method, subject to, loan assumptions, owner financing. Those are the four main ones that we use. There's other ones, but those are the four main ones. And what we do, D, is in a different world, we search for off-market properties that are so terrible that they can't even go on the MLS. Nobody even wants to walk in them. They might be dangerous. That's what we look for. And we use a technique like the BRRRR method. And we use a temporary loan. And then I refinance into a DSCR loan. Again, we can talk about this for hours, but this is people's homework assignment. If you're interested in this, Google these terms and learn about them. Bigger Pockets is a free website that a lot of us real estate investors use.
Okay.
You can go there. It's read up on things. They have podcasts. They have shows. They've got this whole big forum where people and it's all free. I don't know how they make money at that place, but we use it as a great resource. But DSCR loans are great tools. I still need a down payment, quite a large one, if I use them just to purchase a property on the market, which is fine. I can show you great numbers if you do it that way. But as you mentioned, not everybody has that much money laying around. But if you do, it's still a good technique. And for the rest of us, we either are using our primary homes or one of those other 4 different advanced techniques to acquire off-market properties.
Okay. So what is the make or break metric that you look for to see if a property is a candidate for that kind of financing?
Yeah. Okay. So Charlotte is a very good location for you to invest in real estate. Okay. Here's what I want you to do. I want you to call D, say, hey, D, what's the median home price for Charlotte? The median home price. And then I want you to target 3-bedroom, 2-bath homes below the median home price. And below is because that's where our renters live. That's where the working class people, the blue collar people that we want to have, they're good tenants. These are good people. They have families. They just can't buy a house yet. And it sounds weird, but two $250,000 rental properties, I will rent way more than one $500,000 rental property.
Yeah.
Because that's where people compete for good homes. And you might think, Andrew, some of these neighborhoods, these are a little different for me. I know this is where your tenant lives. Remember, they already live in some janky apartment and they're looking for a good home.
Yeah.
I don't own any homes that are, this is not slumlord lifestyle. This is not what we're talking about. We have good rental properties that we want good working people to live in because they're the best tenants to have. They pay on time. They live there for a long time. We want to make them happy, give them a great home because they were living in somewhere that wasn't so good. And when they see your property, they will rent it. But that's what I want to share with you, D. 3-bedroom, 2-bath homes below the median home price. That's a great rental property.
So what's the biggest lending hurdle investors hit after their second property?
Yeah, money.
Okay.
Yeah. Those 4 little advanced techniques I was telling you about, they all solve for X being money.
Yeah.
Even if you got $1 million, your limit's just higher than mine. But everybody has a limit. So if you can figure out a way to get around that limit, the limiting factor is your money. And I want to say something else too.
Sure.
The TikTok and the fake book, like they say a lot of things. I don't want you to be caught up in like the person who's watching this. It's not a race. It's not a competition. Let's say you bought one home every 5 years. You're going to be a millionaire. Mm-hmm. It's okay. Just take your time. But these are the goals I want you to have. I want you to try to shoot for 1 if you don't have 1. And I want you to shoot for 2 and then 3. If you get retired and you have 4 properties and they're paid off and you're going to be, you see what I mean? You're going to see some posts that are be like, I bought 10 homes today. You don't know if they're true. But even if they did, that's not you. You and I, we're regular people. We don't have some of those resources. Save money, live a little bit beneath your means, support your family, have a great job, these things will lead to better things later. So just take it a little slower than what you might see out there.
You have to remember, life is not a competition. The only person that you're in competition with is yourself from yesterday. If you're making yourself better than you were yesterday, you've already done it. Nobody else is watching. Nobody else is caring. It literally is just about you and your family.
Yeah. People's mental health is really important right now.
Correct.
So let's just focus on ourselves for a little bit, and that might lead to good things too.
So we're talking about mental health a little bit. What's a primary difference between the mindset of somebody who has one rental, who owns one rental, and somebody that is trying to scale to 10?
Oh, sometimes when I own a property, I may not even like having a rental. I don't know. So this is not like a one size fits all. This may not be even something that you're interested in. But if you can, it's a really great way of creating generational wealth, okay? But determination is so important in this field because it's really easy to get distracted.
Yeah.
So if you can stay on target and be determined that you will succeed and that you will set goals, save appropriately to meet those goals, you can accomplish great things. The distractions will always be there. Don't get distracted. Stay on target and be determined. You can make it.
So you must have known what I was going to ask you about next, because this is exactly what we're talking about, is with all of the headlines and TikTok and Facebook and all of those, how do you help clients ignore the noise and focus on the actual math of a deal?
Oh, okay. So Dee, this might be kind of helpful for you to know. So like when you go on a listing appointment, you talk about statistics and numbers. I don't know. Do you have a presentation that you give sometimes? Yeah.
I do.
So I, as a loan officer, give a presentation to first-time home buyers. When I bought my first home, nobody told me anything. And they weren't bad people. Maybe they didn't know how to tell me anything. I don't know. But now I'm telling them things, Dee. And what I tell them, it gets them off the fence. They see what's out there and they see the shockingness to it. They become determined really quick. And so in my presentation, it's a no pressure thing. Okay. I'm not talking about salesy stuff. I'm like, here's the numbers. Here's the data. Here's what you need to know. Here's how we negotiate. Here, if you gave me all the information that I needed to know to make a decision, could I make a good decision? Of course I can.
Yeah.
So here's the information you need to know about home ownership. What do you think? And usually like, oh my God, I really have to do this. And that's what you and I already know.
Yeah.
We already know that you kind of have to do it. It's forced upon us now. And you got here not by accident. When the student is ready, the teacher reveals themselves, okay?
Correct.
So if you're listening to this podcast today, this is your teacher right here. Take it. You're going to be in great hands with Dee.
How does your personal background help you maintain a consumer or customer first approach in the industry that gets, and we've talked about this, so over heavy with numbers and everything else?
Okay, you ready for this one, Dee? All right, so Loan officer, right? Mm-hmm. In my industry, the two biggest complaints, I can't get in touch with my loan officer, and they keep asking me for the same things over and over again. Those are the two biggest complaints.
True.
So all I do is I answer emails on the phone, and I stay organized so I don't have to ask them for things over. It's not that difficult, but that's it. Customers, if this is what the customers are complaining about, then we're going to just solve that one right there. Yeah. We're going to make sure that doesn't happen, and we're going to give a great service to you so you have a wonderful experience, and that way maybe you'll think of us again later when you buy your second home or third one. That's it.
It's amazing how these little things that are in our pockets all the time. How many times have you walked out of the house and went, oh, I forgot my cell phone, and you run back in the house to go get it, but yet people don't answer them. The thing rings and people don't answer it. And that's been a huge thing for us. My industry, your industry, it's all you have to do is just actually say hello and talk to people.
Yeah, I feel like there's this piece where, because I see it online a lot. It's funny to make fun of things, right?
No.
But I answer spam calls every
Yep, me
time.
too.
Hey, just take me off your list. And I don't
Yep.
give it a second chance. That's it. Because sometimes it is a customer.
Yep.
What's the big deal? Just delete your email. Just ignore the
Mhm.
call. But
Yeah.
it's funny though, like comedians make jokes about it. And therefore I have to kind of make it a big deal too. Remember, that's entertainment. In real life, I don't want this to be a big deal for you. If you get too many emails, just delete a few. If you get too many
Yeah.
phone calls, just take them off your list. Treat it
Yeah.
as what it is. It's nothing. The important thing is you and your family and your job and your loved ones and your kids. That's the important piece of it. So if you're going to have a reaction, react to those, not the phone calls or the emails. We can manage those easily.
Yeah. It doesn't take much to be able to say, have a great day, even if it is the computer on the other side. So there's so much that people are talking about and pushing out there. What's one mortgage strategy today that offers the best path to a 2 or 4 times return on investment over a decade?
Oh, besides what we've, let me think about this for a second, because I still vouch for buying your own primary home. Almost in every year that we've done it, we can show 20 to 40% ROI buying your own primary home. It's the easiest way to have a good return on your investment. In the platform that I work in with real estate investing, remember I had 4 grand when I got out of the Marines.
Correct.
Uh, um, I'm a millionaire today. It's still weird for me to say it. It's a little weird,
Yeah.
but investing in real estate over that time period has given me financial wealth. So I will still continue to vouch for, find any way to do it that you can. Just do it and don't have any fear about it. Just figure out a path. Because if you can figure out how to own a piece of real estate, one home or two or three, you see how it's going right now, right? They're not
Yeah.
going to get it. Remember, countries go to war over it. Since the beginning of time, we needed land and a place to
Mhm.
live. It's going to be here forever. When the Dow Jones, when the stock market in America was created, I think there was like 14 companies on it. Only one of those even exists today.
Yeah.
Real estate's been around for a long time, millennia,
Yeah.
millennia. So stay with it, invest as best as you can, continue to save money, even if it's a small amount, create that habit.
Mhm.
That's what I want you to do. Focus on purchasing a property and see where it takes you.
There's a song about it, and we talk about it. God's not making any more dirt. Buy dirt, because I think there's only 2 places that is making more land. Saudi Arabia, and I want to say that their experiment in doing that, the ocean still swallowed it up, and Hawaii. And yeah, Hawaii is about the only place, and it's still God's. That's about the only place that God's still making dirt. So, Andrew, if you were, go ahead. I'm sorry.
No, I was going to say, I've been to Hawaii. It's difficult to live there for sure. So if you can just stick to Charlotte, I think you might be a little happier there.
Like living near the ocean, I don't think that would be too difficult, but I do understand it's a lot more expensive.
Yeah. And there's an exploding mountain there. Like the mountain is
Yes.
exploding. It's a little crazy.
So, if you were to start over, you've been doing this for 25 years. Right now, you had to start from scratch. What would be the first move that you'd make?
Yeah, my first move was I don't know if I got lucky or if something was looking out for me, but my first move was to buy a home that I could afford as soon as I could. I don't want to backtrack on that at all. The next move, it took me about 4 years to buy another property. I wish I could have done it faster. That's all. That's all. How can I complain really about where I am?
Yeah.
So I don't want it to sound like I have any regrets. I'm in such a great place. Back then, I will say this one thing. There was no internet. There was no podcasts. There was barely a way for us to learn how to do it. Now you can log on to YouTube or we have so many resources for us to understand where we are and how we can be successful. I remember I went to the library, if you know what that is, a
Oh yeah.
library. I
Mhm.
was trying to find a book on real estate investing. The only one they had was 8 years old. It was already outdated. Even
Wow.
trying to find information, it was outdated information. We had to learn all of it from ourselves. So maybe it took me so long to do it in the beginning because there was just no place else for me to learn how to do it. Now you can learn how to do it. I wish I could get started today because now I could know so many more things faster. I have no regrets about where I came from. I'm glad I learned how to do it the way I did because of where I am now. I have such a blessed life. I have to be thankful every day, D, every day.
And that's a blessing in and of itself, is that you are able to stop, take a look, and realize the joys that you have. I even tell the 20-year-olds now, it's like, you're all about AI. Put it into AI. See what AI gives you. If it gives you a strategy on how to create that wealth for you, because they step by step. But the first thing to do is take a step. Don't be afraid. You are the one who's in control of this, and you're building a team. Find yourself an amazing loan officer like Andrew. Find yourself a real estate agent that can guide you through this transaction. Then you're going to need an insurance person, but you are the one who's in control. Make sure that you find somebody or find a team who's willing to teach you each of the steps as you go through, so you can do it again, potentially at a 4-year pace or 5-year pace or even a 20-year pace. But it's at your pace, and that's the only one that you need.
I love it, D. You're so amazing. Thanks for even having me on your show. What a great time.
Andrew, thank you so much. I greatly appreciate it. We have all your socials. We will put them out. I so thank you for today, and I wish you the best of luck going forward.
Thanks, everybody. Have a great day.
Thanks for joining me on Make Yourself at Home. I hope you found insights and inspiration to help you navigate your real estate journey with confidence. Don't forget to follow, subscribe, and share this show with your friends, because everyone deserves to feel at home. Until next time, stay informed, stay empowered, and keep making moves that matter.